What is the deal with real estate and its crossover to the blockchain? Why is this important? And more specifically, what is the product market fit of having this data on the blockchain? I'm going to dive into this by covering the 18.6-year property cycle. So first up, here is Parcl.co. I've covered this in many different tutorials. You're welcome to watch them. Specifically, I'll be mentioning this because it's on Solana. I'm very familiar with the DApp. However, what I'm basically saying now, it relates to anything that concerns real-world assets on the blockchain. Whatever blockchain this is, whatever DApp it is, if it's a decent DApp, maybe you can long a price, short a price, buy property, sell property, all that sort of stuff, it will relate to this. So starting with Philip J. Anderson. This man is an expert in commodity cycles, stock cycles, and housing cycles. You can check out his Twitter, of course, but you'll see him put out a lot of tweets or just more kind of retweets of things that are happening, such as US luxury home prices hit record high in 2023, up 9% annually. Now, since COVID, people have been calling for a recession. We're in a recession, things are too high, etc., etc., etc. Prices are high, for sure. But where is this recession? When is it going to happen? There's a lot of stuff to cover in this, but basically when you see a lot of bullish stuff that relates to money moving into an infrastructure fund, a building fund, maybe hotels being made, the line being created, which is a major Middle Eastern project, then you know that you're still in the second half of the real estate cycle. Before we go any further, this is not financial advice, this is just education and opinion from others that I'm regurgitating to you and hopefully in Explain Like I'm 5 manner. So let's go through his website. He does have a book out, however, it's kind of a complex read, to be perfectly honest. So let's have a read. A study of US history, for example, reveals a very clear average 18.6-year cycle in US real estate prices measured from trough to trough or peak to peak. The actual cycle has never been shorter than 17 years, never longer than 21 years. Also goes on to say that the Australian, UK, and other Western countries' economies follow the US at the major market moves, although in Australia, each state ebbs and flows differently in between. So let's go down a little bit and we can basically see a little bit of information where for the last couple of hundred years, as long as it's been basically tracked, price goes up, crash. Price goes up crazy, crash. Price goes up, and so on and so on and so on. This is until 1923. Let's go down for this one. Price goes up, crash. This is like a mid-cycle kind of bump. Price goes right up, crash. Price goes right up, 2006 and 07, and then crash. And let's go over this. The final 2 years of the 14 years up, we call the winner's curse period. By then, asset prices are overvalued and being highly leveraged. This is not the time to be all in and highly leveraged. So right now, we're in 2024, and per the information that Phil has and other people that follow Phil, they predict that 2025 and 2026 are going to be the winner's curse. Things are going to go up, and people are going to think they're geniuses, just like we do in crypto. So this is basically the 18.6-year economic cycle. And the theory essentially goes into the fact that all value tends to go back to the land. You're always going to need land. It's a very scarce thing. You can't create anymore. Everyone needs a house. If you're rich, you probably want a second or third house. And on top of that, the population is increasing. Now, I'm not signed up to this service, but if you want to, here's a link. There's no referral or anything like that. But if you want to learn more about this, you may as well go and check it out. I'm also not up to date with property prices in any city at all, anywhere. However, Australia was home for quite some time, so I do recall prices going up and prices going down, but mostly prices going up. And right now, you can see this is in the Sunshine Coast, so this is not an expensive area, or shouldn't be an expensive area. I don't know what the average wage is, but maybe it's like $60,000 a year. And you're going to see a lot of apartments, even without views, this obviously has a nice view, from like $1 million. You can see general housing in kind of, I don't know what you'd call it, suburbia, I guess, being around $700,000 or $800,000 when it wasn't too long ago, they were $400,000. I rented a place in a nice area that you could only basically get to via car, no public transport. It had a really slow internet, under 100 megabits per second, and that house was probably worth $700,000. Now it's probably worth $850,000, and the difference is maybe 18 months. Another thing you start to see is the cost of actually producing these going up, as well as the labor. So in Australia, prices of lumber and supplies increased hugely, but I'm pretty sure this was universal. Then when it comes to trying to find good qualified tradies, it was impossible. And a lot of them could literally ask for double what they were getting the previous year if they were working for someone else. Now this is an area that I'm slightly familiar with, and I can definitely understand that I'm cherry picking something. This is one data source. I could definitely find more, but there's no time in this video. This is Surfers Paradise in Queensland, Australia. And the whole of Surfers Paradise, it's okay, but it's just a lot of tall buildings. Don't really like it. There's a lot of shade because every building basically shades another building and blocks a view. Now this is the Hilton building. So in the Hilton building, they obviously have like the Hilton, and they have a lot of properties in here that are apartments. So this was being built in, I don't know, maybe 2006 or so, but around 2007, 2008, that was when they were supposed to be completing it. That was when the crash happened last time. Now a lot of these were being sold for $1 million off the plan. That was over 15 years ago for 2 bedrooms, 2 bathrooms, and 1 car park. And I'm pretty sure the developer went bust and someone had to come over and finish it off. I can't remember all the details. But a couple of years ago, probably 2.5 years ago, these second-hand apartments, not brand new, they were selling for about $590,000. So someone that had bought it for $1 million or close to $1 million, still 13 years later, was underwater significantly. I won't go into too much detail, but let me just pull up one. This is $700,000. This is not facing the ocean, this is facing a river. All these doors, they are of meh quality. This is a body corporate fee, maybe like $120 a week, something like that, Australian dollars. And everything about it is, it's okay, but it's, to be honest, it's meh. It's real meh for that amount of money. Here's one that's facing the ocean, $900,000. So it's almost probably what the person paid for it initially. And like these are small, I don't know, 80 square meters. I won't continue too much, but essentially this is really meh. And this is not uncommon. A lot of places are overpriced, even now. So let's have a look at this chart. In 10 years, from 2011 to 2021, the price has gone crazy. And in the last few years, I imagine this is up another 20%. I'm not really sure, but probably maybe another 15, I think. 2022 went down on average. So if we have a look at this, everything essentially went up quite substantially, with the exception of the Northern Territory and Western Australia. These are 2 places that would have basically only gone up in general due to mining. So if a mine closed, then money leaves the area and it goes to another area. And you can see that was the case with the Northern Territory, basically not breaking even, and Western Australia going up, coming down, and then just over the median price. Here's another property in Sydney. This is in a place called Glebe. I used to live in this area. This actually used to be, as far as I'm aware, this particular building used to be like housing estate. So people that didn't have much, they lived there, they didn't pay rent, and they didn't have jobs and that sort of stuff. Now, of course, it's now privately owned and it's been renovated. But this here looks lovely. And by the way, Australia does love real estate. It loves it a lot. And therefore, the real estate photography, all that sort of stuff, they're very, very good at it. But just so you're aware, this here, let's find a floor plan. This is a studio. So I don't know the exact dimensions, like it's 6.8 by 6.4 meters, but including everything, but it's tiny. Well, there you are. It's 55 square meters, and that would include the courtyard. And this is $650,000, the asking price. I first learned about the 18.6 year cycle from a friend, Jason Pizzino, and he and his brother, Michael, they talk about this quite regularly. Now, by all means, give them a follow, but just be aware they are traders. They don't like Solana. They don't tend to do anything on chain, just trade things and just analyze markets. That, of course, has value, but most people watching this are, of course, involved in the Solana ecosystem. So this is the 18.6 year cycle really made simple. So for 14 years, things go up, but there is a mid-cycle slowdown. This happened during the first part of COVID, and then up it went. We are currently here, and then 2025, 2026, the winner's curse comes. Then we reach some crazy price, and this is essentially where people keep on trying to up the rents to try and cover most of their mortgage, and then it's just not possible. And things just tumble. There's too much leverage in the system. Down things come for 4 years. Exactly where the bottom is it within 2 years? I don't really know. But basically, for 4 years, it's recession-like. banks will be unwilling to loan you money, people will be going bankrupt, etc., etc. So now what I'm going to show you is a website I have no idea about. I haven't done any research into it, but basically you're going to see a lot of things like this over the next 12 to 24 months. And this is Bixos, real estate NFT conversion, creating a global real estate marketplace on the blockchain. I have no information on this, so this is not in any way a suggestion that you buy this. But this is basically talking about the value of putting these houses on the blockchain. Now, Philip had a thesis that when a lot of this starts to happen, that will mark quite a top, because all of a sudden housing will be affordable for everyone. The 20-year-old with very little money, he'll have a 1% share in some house on the blockchain, and that of course will drive up the prices. Chainlink, the Oracle service, also has this. What is tokenized real estate? Tokenized real estate is when a real estate property or its cash flows are represented as a blockchain token or tokens to increase liquidity, streamline processes, and enable digital ownership. Now, the issue with this is, of course, you have to deal with multiple councils and governments and laws, and it's very, very hard to prove ownership of an NFT that could be in anybody's wallet. But people will push in this direction. So this is quite different to Parcl. It's not shorting or longing a price. It's essentially owning the NFT can be equivalent to owning the property. Transferring the NFT can mark a change in property ownership, and the NFT can hold critical data such as past sales, address, and more. Or to give it more information, we can have a look at RealT. Once again, have no idea. It's just something that basically fits my thesis. So RealT.co, this is exactly what I was referring to. They go and buy properties. I'm guessing they're buying properties that are affordable, that have a good expected income or whatnot. And they also have calculated the return on investment from the price of the land and the house going up. Now, this is just a thesis. This is just a prediction. This could go up until 2026. A lot more people will enter. Even if 10 million people watch this video and believe what I'm saying, which of course is not financial advice, there will be 200 million people that think the opposite, or 2 billion people that think the opposite. And they'll just think that prices continue to go up. But nevertheless, DApps like this will grow and grow and grow. Now, a popular question, and one that I've asked myself, is what about all this money printing? Because there's so much more debt in the system, will the crash still be the same, or will they continue to keep on printing money? We can have a look at the national debt of the United States, 2006, whatever this amount is, $8 trillion, and now 34 trillion. So it just doubles and doubles and doubles, and COVID happens and it goes up crazily and crazily. And I won't dive too much into debt. This is something more Bitcoiners are going to do. But obviously, it doesn't work, right? You don't want your country to be in debt. You could even argue, really, who are you in debt to? Some say this or this. Some say the Federal Reserve is privately owned. I have no information on this. It's all, who knows? I just don't know. All I do know is that this has been going for quite some time. And printing has happened for quite some time. And if they print and print and print, all that tends to happen is the cost of goods go up. Your money becomes worth less and less and less. And that's basically the main selling point behind Bitcoin, digital gold. So back to Parcl. Why does this have product market fit? Especially, we're not yet in the winner's curse. This period from 2025 to 2026, as predicted, it hasn't started yet. So why would we really be keen on this now? Well, to be honest, now is probably the time to learn this if you're interested. This right here, this is not going to do a meme coin kind of surge. It's not going to go up 200%, but it's going to be more stable than all of our cryptos. There's normally more liquidity in all of these markets. Everyone needs a house. And all you're doing with Parcl is you're basically longing or shorting the price. And at the moment, with all these markets here, I can't really give any information because these are not specific markets that I'm familiar with. Although I'm not really familiar with any markets, but none of these are. However, there's 10 markets now. What if in a year's time, there's 100 and there's some cities that you are very familiar with? Then, more importantly, maybe you don't believe what I believe. Maybe you don't think things are going to go up, but then in 2025, things start to go up with some cities and not the same with others. Or maybe there's a particular city that has a crazy drug epidemic and people start leaving it. Maybe that makes prices go down. Personally, with Parcl, there is product market fit because in no previous cycle could we short or long a market. Our only way to gain exposure would be to buy a house, or if we had one, to sell a house. And all this information here regarding price, this relates to the median price per square foot. In London, it's per square meter, and with Paris, it's per square meter, hence why it's so much more expensive. Now, if Parcl existed in 2008, at minimum, it would have provided transparency and a venue for liquidity. Now, this quote here basically sums it up. If Parcl existed in 2008, at minimum, it would have provided transparency and a venue for liquidity. We'll have to see how it goes come 2025 and 2026, but my prediction is the longs will take control, and then at the end of the cycle, prices will fall and the shorts will take control. For those that want to be profitable, of course. Once again, not financial advice. Now, just a reminder, towards the end of the cycle in property, this is when we start to see massive undertakings. Like as an example, a lot of cranes will start going up in busy cities. There's a lot more people being hired in construction. Things get busy. This is Neom, and they are building the future of urban living. I imagine you've heard of this, but this is a city stretching across 170 kilometers from the epic mountains of Neom across inspirational desert valleys to the beautiful Red Sea. And they've already started building this. This is supposed to be billions and billions of dollars. And everything is supposed to be happening in this 170 kilometer city. This is by far the biggest project that's been undertaken, but there are other very sizable ones as well. And these all show that things are still bullish. But 2024, this will tend to be a year of limited upside. With 2025 coming, a lot more upside should happen. So that's why things like Parcl do have product market fit. There will be a rotation of money out of crypto into property. This will happen by smart people. And if the DApps are very secure with a lot of liquidity and insurance, then I imagine they will have a massive amount of trading volume as well. And so Parcl and other DApps, they've got about a year and a half to really build. And that's my thesis. Thanks for watching. Catch you in the next video.